Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday, the 18th of December, 2022. And last week, gold and silver prices disappointed us. Why? Because we had the FOMC rate rise lower than expected. But it was Jerome Powell's comments that put paid to any meteoric rise in gold and silver. So, to reflect on that and where we think prices are going to go for the remainder of 2022, let's take a look. Yes, disappointing, because by the end of the week, very little actually happened to gold and silver. Let's run through the prices. Gold fell $4 last week, falling from $1,797 to $1,793. It went as high as $1,824 and as low as $1,774, a fall of just under 1/4%. In sterling terms, it finished the week at 14.76. That's up £10. And in euros, it closed at 1,693 euros. That's down 13 euros. Now, silver fell a little more. It fell 24 cents, falling from 23.49 to 23.23, having been as high as 24.14 and as low as 22.57, a fall of 1%. In sterling terms, it closed at £19.13, that's down 4p, and in euros, it closed at 21.94 euros, that's down just over a third of a euro. The gold to silver ratio went up from 76.5 to 1 to 77.1 to 1. Now, the difference in the end between gold's high and low was $50. Can you believe it? In spite of all of the announcements that came out last week, which we shall cover shortly. And the difference between silver's high and low was $1.57, actually slightly lower than the previous week. So most of the action really took place the week before this last week. Now, we did predict last week we expected to see gold trade between $1,750 and $1,850 and silver to trade between $22.50 and $24, but with $21.50 and $24.50 as outliers. While gold traded within our normal range, and so did silver, except momentarily, it did fall into our outlier range on the upside by 14 cents. That's when it went up just above $24, and then fell back again. Now, during the week, we produced 3 videos covering why gold and silver moved the way they did. And we refer you to these videos because I'm not proposing to repeat the content that we put in those videos today. They were our gold and silver prices about to soar, gold and silver prices rocket, which they did initially on lower than anticipated CPI figures. That was on Tuesday. And then blood on the carpet after the Fed raises rates. Why? Because of what Jerome Powell said afterwards, not because of the rate rise itself. Now, we've placed links to each of these in the description box below, and we'll put them in the comment section too. Now, we shall discuss the reasons for these movements after we've looked at how other financials have fared. Bitcoin stands at $16,734. That's down $438. Though it did actually rise quite considerably as a result of what happened on Tuesday, but has fallen back significantly since. Equities were also lower last week. The Dow Jones closed on Friday at 32,920. That's down 556 points on the week. The S&P 500 closed at 3,852. That's down 82 points on the week. And the one that tends to affect cryptos more than anything, the Nasdaq Composite closed at 10,705, and that's down 299 points on the week. Oils, unfortunately, were higher this past week, with Brent crude closing at $79.04, that's up $2.94, and WTI crude closing at $74.29, that's up $3.27 on the week. And the dollar index was broadly unchanged. It was marginally down by 0.11 points, and it closed at 104.70. That's the spot index. Now, let's take a look at what data was announced this past week and what we can at least look forward to this coming week. Okay, we'll look at last week or this past week's figures, but We have covered these in the videos mentioned earlier, which we've placed in the description below. On Monday, we had the New York Fed 1-year and 5-year inflation expectations. The 1-year is at 5.2. Interestingly, the 5-year is still above their 2% target at 2.3. Then on Tuesday, we had the very good, not good in reality, but good in comparison with expectations, Consumer Price Index for November of 0.1%. Bearing in mind, in October it was 0.4 and expectations were 0.3. And core CPI came in at 0.2 against expectations of 0.3. And year on year, we have CPI at 7.1 and core CPI at 6. Better than the market anticipated, which then caused, of course, a rally in equities, cryptocurrencies, gold and silver, a falling of the US dollar. But then Wednesday occurred. And although, as we predicted, the Fed funds rate was raised by 0.5 percentage point to 4.25 to 4.5, Jerome Powell's comments after the announcement made it very clear that investors may be a little surprised as to how high the Fed funds rate will actually go, even though it may not go up as quickly as many anticipated. The duration could indeed be longer. But he has stated again, data dependent. And then on Thursday we had retail sales, which to some extent then buoyed markets on Friday, because retail sales came in at minus 0.6% against expectations of minus 0.3%. And if you exclude motor vehicles, came in at minus 0.2% against plus 0.1%. Manufacturing index for Empire was down 11, considerably lower than anticipated. And the Philadelphia Fed Manufacturing Index was also down. So all this is suggesting the economy is indeed slowing. And the manufacturing, the S&P PMIs, the flash and services were also lower than expectations. Now this coming week, quite frankly, we don't think we'll have a dramatic effect until Friday, and even then it's going to be muted because we are moving into the Christmas break. So we have the NAHB Home Builders Index on Monday, building permits and housing starts Tuesday, consumer confidence is one we will look at on Wednesday, Thursday the initial jobless claims, and then on Friday we've got the PCE price index and the core PCE price index, and they are important and will be noteworthy, but bearing in mind that the FOMC is not meeting until February now, the 1st of Feb, then frankly, however these come out, not going to have a huge effect because we'll have another index for December before the Fed meets again. So going back to gold and silver, gold had a serious opportunity to break out last week, potentially hitting 1850. And then moving on towards 1900 due to thin trading in the run-up to and over Christmas. Well, it managed to reach 1824 on Tuesday, when the CPI figures came in below expectations, but Fed Chair Jerome Powell's statement on Wednesday with the 0.5% interest rate rise, stating that rates may go higher than many investors predict, but at a more leisurely pace, frightened the markets and caused gold's descent. A strengthening of the dollar and pushing gold towards the low for the week at 1774 on Thursday, from which it staged a slight recovery Friday but still closed below $1,800. It's clear to us now that gold and silver, which we shall come on to in a moment, that's silver, will now be victims of relatively tight markets due to the pending Christmas holidays. In other words, small investments into or small investments out of, or disinvestments, precious metals, could have a disproportionate effect. It's for this reason we envisage that gold is going to be range-bound before Christmas, somewhere between 1725 and 1825. There's not a lot now to move markets, and new positions are not really likely to be taken by investors ahead of the holidays. So prices will remain range-bound unless there is a significant geopolitical event. So with this in mind, we forecast gold next week will range between 1725 and 1825, with 1700 and 1850 as outliers. Silver suffered a similar fate. It rose above $24 and could have headed for $25, which was our maximum potential forecast for the end of the year. However, Powell's comments put pay to that, and like gold, after its peak on Tuesday, prices fell off Thursday, moving into early Friday, staging a slight recovery towards the end, and then closing around 20 cents lower than it began the week. There is certainly strong support now at the 50-week AMA of $22, and resistance at just above 24. So it's between 22.50 and 24.50 where we see silver trading towards the end of this year, with $22 and $25 both being outliers. So we're not expecting silver to fall below 22, and we're not expecting it to rise above 25. Now again, unless there is some major news, we will see silver range bound within this $3 spread, and as mentioned, will likely run through to the end of the year. Now just please bear in mind that with liquidity short, the slightest investment or disinvestment can disproportionately move prices, but they will be short-lived. So what do you think is going to happen between now and the end of the year? Do share your thoughts. We are going to produce a video on Christmas Eve, so watch out for that. That's a week today, and then we will have Christmas Day off, although we'll probably repeat the same video. Let us know what you think will happen to gold and silver between now and Christmas, and then ultimately towards the end of the year. And between Christmas and the New Year, we shall give our forecast for 2023. Thank you for listening. If you haven't done so, please subscribe to the channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And as always, we wish you a safe, enjoyable weekend and prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.